Officer and Managing Partner of Quinlan Associates and former Chairman of the FinTech Association of Hong Kong. Please welcome him in conversation with Ms. Julia Leung, Chief Executive Officer of Securities and Futures Commission.
All right, good morning everyone, and good morning Julia. It's good to have you here today, and I'm sure a lot of people in the audience want to unpack this digital asset topic because it is so front and center of everyone's minds in Hong Kong. Just reflecting on where Hong Kong is at, I think a couple of things were mentioned before by Bill Winters. You're talking about the evolution of the Hong Kong regulatory landscape. The HKMA has rolled out its stablecoin licensing regime. The VATP licensing is in place. We've got the LEAP framework from the government. So Hong Kong has obviously made a lot of strides to positioning itself as a trusted international hub for digital assets. Now, when it comes to the SFC, one major change that we've seen is the shift in focusing from licensing towards sustainable development of the Web3 ecosystem. So from your perspective, what does competing for global liquidity actually mean in the context of digital assets? And then how do you see Hong Kong positioning itself to succeed?
Thanks, Benjamin, and good morning to everyone. I'm very happy to be here today to share our vision, particularly that of what you have just asked me about how to compete for success. Now, years back, you were quite right, we were very focused on licensing. We're very focused on building a very safe ecosystem, let's put it that way, because we have seen these exchanges, centralized exchanges, collapse. We've seen hacking. We've seen quite a lot of problems. And so when we started that journey years back, we make sure that it's a kind of like a closed loop system where we make sure that the public, when accessing, is our licensed VATP, which under our supervision would be at least very compliant. Now, this is in stark contrast to what you see in the forex or fixed market, where when an investor places an order, that order is shared in a global order book in which anyone in different parts of the world can match. So we've been thinking very closely and diligently to see how we can change our system, providing that kind of safety, but at the same time access the global liquidity. So later today, we will issue a circular in which we will allow a licensed VATP platform to actually share a global order book with its affiliates overseas. And that will ensure that our investors are actually able, with this integrated order book, our investors will access the global liquidity, but also at the same time bring those liquidity to Hong Kong. So I think this is closer to what is happening in the traditional finance, and this is taking one important step towards what we already unveiled earlier this year about access, how to access to the rest of the world. Now, we are also thinking of having brokers tapping into global liquidity, but that's for another day.
I think that's very big news, and I know a lot of the VATPs here would welcome the access to global liquidity, because I guess for the audience, before it was primarily your order book had to be ring-fenced in Hong Kong. So that really could change the game quite significantly. The next question is really on basically tying in the liquidity story and picking up on what you said. Liquidity in digital assets is very dependent on cross-border participation and confidence in market integrity. So how does the SFC think about balancing these two things? One, open global access, and then on the other hand, the need for strong regulatory safeguards.
You're quite right, because we are very aware that overly stringent requirements would drive away liquidity and drive away talents as well. But if you are very lax on the requirements, you actually erode the trusted platform that you repeatedly said. And so it's tricky how to strike a balance. By having a global order book, It is very different from the current, as you mentioned. It is ring-fenced, it is pre-funded, and only matching within Hong Kong. Now that you're opening up and sharing that liquidity and tapping into global liquidity, that means your counterparts is an overseas centralized exchange, which we have two risks with that. One is the risk of collapse, that leading up to settlement failure. Second will be manipulation. It will be very challenging if there are manipulation or integrity issues happen on the other side, but they are matching the books on the Hong Kong investors. So thinking through these issues, we put sufficient safeguards, which is we will require the overseas affiliate license platform to also have pre-funding. We will also require a joint surveillance program, and we also required our license platform to have reserve funds for compensation. So in that sense, we are hoping that we are able to have the proper balance, and we are setting out all these requirements in the circular to be issued later today.
Yeah, the balance is pretty important. I remember when FTX was originally in Hong Kong, and then when they left, there were a lot of frowny faces, and then I think within a short matter of time, we were very happy with the stance that the Hong Kong regulators actually took. So, speaking of regulation, you've seen regulation across a lot of jurisdictions evolved. In Europe, you have MiCA. In Singapore, the Payment Services Act. Everything seems to be moving in parallel globally. So where do you see the Hong Kong digital asset regime standing out in terms of attracting that global liquidity? And where do you see room for deeper connectivity or harmonization?
I think you just mentioned the FTX collapse and failure. And then I recall prior to that, when FTX was still riding high, people were saying that you're driving liquidity, you're driving talents to other places in this region. And with our investment protection priority at that time. After the collapse of FTX, a lot of the jurisdictions actually pull back, meaning that they are toughening or beefing up their regulations. And then somebody asked me whether you go ahead to regulate and to allow licensed platforms in Hong Kong. I said, this is pretty much what we have in mind. We've been very consistent because we know that the kind of safeguards and guardrails we put in place will prevent the misconduct that will at least mitigate the risk of such misconduct like FTX. And so I think we stand out as being very transparent, very predictable, and also the 3 C's. What I meant was clarity of our rules, consistency, and that will give certainty to the financial sector. You can say that we are on the tougher side, but then once we are sure that we are able to protect the investors, we do relax, as we did with the global liquidity. But we have been very consistent and very clear, and that's what the financial sector needs. You asked me how to build a bigger market. Now, we are also very active internationally in the IOSCO standards, a standard setting body, and the FSB in terms of setting out the rules for crypto platforms. We know that in order to build bigger markets, we need to actually collaborate and have harmonized rules, because otherwise the liquidity, as you say, will move to some very light touch jurisdiction. So we are also collaborating and reaching out to other regions and other jurisdictions in order to build that bigger and more consistent and harmonized market.
I think the consistency is key, and people underestimate it. I remember when there was the flood of activity moving to Singapore, and then the MAS kind of had open arms tacitly, and then it was a move to please don't advertise to retail. And then a few months ago, it was if you're servicing non-Singaporean clients, please close shop and get out. I don't think we've ever had that kind of shifting statements from the regulators in Hong Kong, and that consistency actually really does matter. And you're actually seeing that regulatory harmonization come into play and the arbitrage window closing quite significantly?
That's because we are the early adopters of the same business, same risk, same rule, and so this is being embraced by other jurisdictions, MICA and even other elsewhere. And so this is a very good basis for having that harmonization. And we are actually, in the region, we have quite a lot of sharing of experience, and we actually, because we are kind of early in this, building up these different ecosystem, the regulatory framework for it, and so this is the place where we actually export quite a lot of our experience there.
Fantastic. So moving on to kind of completing the Hong Kong digital asset ecosystem, recently seen that the SFC did a joint consultation with the FSTB on the regulatory regime for virtual asset dealers and custodians, and that seems to be completing the final piece of Hong Kong's digital asset framework. So what key policy gaps are you aiming to close through these proposals?
Before I get to the public consultation and the gaps here that I'm going to close, let's talk about the minor gaps that we are further closing today. We're going to issue a second circular. I mean, it's very rare that we have two circulars, a combo, on the same day. But we want to celebrate this 10th anniversary of FinTech, which, by the way, I was there from the very first FinTech week. This second circular we're issuing also later today will broaden the range of services and products which are allowed right now. The first is the emission of tokens. Currently, you're probably aware that there is a 12-month track record for tokens, whether it's for retail or professional investors. We're going to relax that for professional investors. That 12-month track record can be waived, so there's no need for that. And of course, for the HKMA licensed stablecoin, there's no need for that track record because it's already authorized by the HKMA. The second thing that we will make very clear is we will make very explicit that our licensed platform can distribute digital assets related products and digital securities. So this is also something that will make it very clear in the guidance that they can do so from now on. And the third one is that we're making very clear, since we are putting together the custodian regime, and these platforms all have their affiliates as associated entity as custodians, we are saying that you can actually custody tokens or assets, digital assets, products, which are not traded on your platform. Currently, they're all traded on the platform, but it can allow you to be act as custodian for those platforms. So these are the minor gaps. And as to the policy gaps that we are closing with the public consultation, we've got quite a lot of support for both the VA dealing and the custodians. For the VA dealing, we will be looking again and having received some of the comments, we are minded to expand the licensing regime to cover not only dealing, but VA advice and VA management. Now, right now, as you know, the VA management, they already are able to manage, but I think to have put in the AML amendment bill will actually be consistent with what we are doing with the SFO. And so we are still in discussion with the government on these matters. As to the custodian, well, as we have already required our platform to have very high standards and very robust standards, because custody is the holding of these assets, and these are investors' assets. And so we really have to take a closer look, and we will come out with the requirements, mainly around managing the risk to the private keys. Now, given the high-risk nature of these VA custody, the SFC expects to license only the most robust and reliable players in Hong Kong, ensuring that this is a trustworthy environment. So these two proposed regimes would be the final pieces, I would say, major pieces to the regulatory puzzle. So with that, in train, then we would expect that our licensing regime for the digital assets will mirror that of traditional finance, which ranges from dealing, exchange, advice, management. So that should be the main suites of licenses are there.
Well, it also makes sense to me, given that custody is the thread that supports the entire digital asset ecosystem, to have that robustness around the regulation there, because if something goes wrong, then it's some big trouble. So the emphasis is sustainable and trusted ecosystem. That's what I'm hearing, and I'm sure that's what a lot of the audience is hearing as well. But what does that mean in terms of success? What does success look like to you, to the SFC in concrete terms? Is it about greater market participation? Is it about more product diversity? Is it about increased international recognition? What does success look like?
As regulators, our success is not measured by dollar and cents, for sure. But our objectives in the traditional finance, and it would apply to Web3 and apply to digital assets ecosystem, is the principles of being fairness to market, orderly market, transparency to market, and free of manipulation. So success for us at the SFC is that we are able to apply those principles and able to see that underpin those same principles which underpin the stock market or securities, traditional capital markets will also be underpinning the digital assets and digital markets. And this is because this is how we build trust. And with trust come finance and come the participants and come products, as you say. Success is also able to improve on the traditional finance robust the infrastructure, the settlement clearing and settlement structure, because we blockchain potentially is able to create that efficiency and effectiveness of the transfer of the subscription, redemption, transfer of these digital assets once you tokenize it. And so if we're able to actually leverage on it and actually build an even more robust system, I think this is success. And the third one is, of course, scaling of these products that you mentioned, whether we're able to scale it. And for that to happen, you need, we've already mentioned, harmonization of standards, not just in Hong Kong, but also elsewhere. I mean, Eddie earlier on is already talking about blockchain to tokenize the deposits in order to achieve that instantaneous settlement. But also, for that to happen, also following what we already said in the Aspire roadmap, allow more products, allow that diversity, and also the market making to be active in this space.
Okay. Mindful of time, so it brings us to, I guess, one last question. And this is where we get to take out the crystal ball, and I know Bill Winters didn't have full clarity on what the future would look like either, but he was very confident in the vision of where this space would go. Looking ahead, the global liquidity story, the overall development of digital assets may look very different in 5 years' time from where it is today. So where do you see this kind of future of finance, and then what role do you envisage Hong Kong playing in this future? Is it more of a regional gateway? Is it a global standard setter? Or is it something else completely different?
I think just as our predecessors are not able to see where Hong Kong or this traditional finance capital market will lead us to, here at this point, I wouldn't say that I have the crystal ball to see where Hong Kong will be. But what I do know is if we take every step by step, we will get there. And we noticed that one of the reasons when I look at it, why digital assets have this quick take-up is because a younger generation of investors, they are young, they're more risk tolerant, and they behave differently. I mean, I read the traditional financial newspaper for information. They get it from social media. And so we as regulator should be agile in terms of in terms of the way that we operate the system and allow them and build in. If this is what they want, if instant settlement, faster cycles, more funding using the tokenized coins is the way forward, then we think hard about what we need to do in order to mitigate the risk that comes with all this instantaneous development. And these are the opportunities that comes with the risk. And so I do think that we need a lot more education to make them aware of it. In the regulatory space, we already spoken about how we look at it to build that alternative system or this alternative operating system from traditional finance and combine the two as well. But all of you in the audience, whether you are traditional finance type, or you are the crypto natives, or you are the FinTech technology, you are the ones who are piloting these new products and new technology and building the robust platform for this to happen. So I do truly believe that together we were able to lead Hong Kong forward. And whether that is a gateway role or a center role, I think we are, as a number of speakers already said, we are already ahead of the game.
I do agree with that education point. I spoke to one person and they said they invested in Shiba Inu, and I asked why, and they said because it's cute. So I think as a regulator, the education point is definitely needed. But look, really appreciate your insights today. Thank you so much. Ladies and gentlemen, Julia Leung from the SFC.
Thank you.
Thank you.